FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Financial Survival Network is brought to you today by Orin Resources, a junior exploration company with the appetite of a major. It's hot on the trail of the next globally significant discovery, creating enormous potential upside for you, the shareholder. Orin is one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. Orin's unparalleled technical team and highly experienced management has a history of success in advancing and monetizing exploration assets. No wonder Orin's been called one of the best in the junior exploration sector. Orin trades on the TSX and the NYSE under AUG. To learn more, go to orinresources.com. That's AURYN resources.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is 2/12/19. Time is moving right along. Well, it appears that precious metals, particularly gold, is in a bull market. Perhaps silver is more neutral right now. Well, how can you tell if it's going to go higher or if it's just going to pull back? If this is going to be like 2016, where we had a major rally, stocks went through the roof and then rapidly retraced their gains. Well, that's not what you like to see. And if you're interested in gold, following it, then you definitely want to email me, become part of the email list, kl@kerrylutz.com. Any questions or comments? Happy to answer. So someone who's been pretty much spot on this gold cycle for quite some time, I'm talking about Chris Vermeulen of the goldandoilguy.com is with us now. Chris, welcome back. Hey, gold is appearing very bullish. Is this the start of a bull move or just the end of a little intermediate technical move higher?
Yeah, well, thanks for having me on the show, Kerry. Looking at gold, I am bullish on gold. It has had a very nice run, and we saw a big standout kind of washout low back in August, which is when subscribers and we got into gold miners. And really, about a week and a half ago, the day we saw the market top out, we actually got out of that place simply because it was a beautiful run from that point on. I am still very bullish on the precious metal cycle. I think in general, though, we're going to see it become a little volatile, a lot like what we saw the first half of 2018, which if you look at the weekly chart, it's just a big sideways chop, very unpredictable, gaps to the upside, gaps to the downside, huge intraday reversals and intra-week reversals. So I think that's what we're about to get into. At this point, gold is, it's been pulling back a little bit the last week and a half. Overall, that leg of the move is up and done, in my opinion. So now we're just going to get into a point where we need to let the gold market, it might push higher and chop around for a while. It could consolidate. And I think we just have to let it build a launch pad. I think there will be the day in a couple months that we'll see it break out above that 1375 area, 1360 area, and it'll be off to the races. But right now, I think money in there is going to chop around, and there's probably some different ways you can invest that money going forward.
Yeah. So what about silver? Is silver just going to follow gold, or is it at some point going to lead?
I think silver will lead after gold is broken out. I tend to see gold and gold miners break first in many cases, and then silver kind of follows suit. The silver chart is, when you look back on the weekly chart and zoom back to, 2016, it's not looking the most bullish. It's kind of had a big breakdown in 2018. It's stuck under resistance, but silver has a way of playing catch up. And when it's on fire, it is explosive like what we saw in early 2016. So it'll play catch up, but not till after. I don't see silver leading. I see it lagging. And I like that because many times you can try to catch the plays in miners or gold. If you miss some really good entry points, you can usually find a great entry point in silver because it can lag sometimes even up to a couple months. It's happened before. So I do like silver. It's kind of your second, in most cases, your second chance or your second trade in the precious metals for a push higher.
Interesting. So what about the stock markets? Have they totally peaked? They look like they're kind of trading in a channel slightly below their, 10% below their highs from last year. Are we heading towards a bear market there?
Yeah, I hate to say it, but I do. I think the market is very close to a bear market. We've broken down on many different technical levels, percentage-wise, and key support zones on the major indexes and the transportation index. To me, this is potentially the first bear market rally happening. And really, we need to see where this rally stalls out and keep an eye on some of the leading sectors, the past leading sectors like technology, which are underperforming. Those big moving stocks really aren't the safe haven plays. Money is clearly flowing into defensive sectors, utilities, precious metals. All the signs are there that we are on this final, this could be the final major high in the market. And it's just going to be a matter of time before it plays out. It's a stock picker's market right now. You have to find the hot pockets where money is flowing into them. And you look at the Toronto Stock Exchange, it's resource heavy. It's outperforming the U.S. equities markets. We saw this happen in the 2001 top. We saw it happen in 2007 and 8 top. It's starting to happen again. And resources, I think, are going to come back and shine. And I think they're only going to shine for a couple months. I think they're going to have a pop and a nice run. Everybody's going to get all excited, and that'll actually be a top for them as well. Because when we go into a bear market in a recession, we see all these things pull back. There'll be leaders after a bear market, but you don't want to be holding gold or gold stocks during a bear market.
Yeah, so gold too, well, but it pulled back like in 08, 09, it pulled back from 1,000 gold and then, came charging back, broke 1,000 and eventually went up to, 1,800, 1,900, nearly 2,000. And so you think we'll see that type of replay again?
I do. I think we're setting up for that type of replay. That was a big pullback. A lot of people, for some reason, forget that gold went through a bear market when the stock market crashed. It went from 1,030 all the way down to 694. It's a huge percentage drop. And that's fine. I mean, you just don't want to be holding anything when we're in a bear market. But the precious metals will be an early bloomer, and they're the ones you want to get into because that'll be the next hot pocket again coming out of this. So it'll be very interesting to see what the equities markets or the precious metal market does here over the next 2 to 3 months, how high they can go, if they can even break out, or do they stall here and roll over with the bear market and make another leg down into this $900 an ounce range for gold. I mean, we don't really know exactly how far it's going, but you don't want to be holding this stuff during a bear market.
Yeah, it makes sense unless you're there for the longer haul. And it's still got to be a little bit terrifying, a little bit trying to watch something lose 28, 30% in a very short period of time. I mean, it's like a matter of weeks. It went down from just over 1,000 to just under $700. I mean, that's a death-defying leap. A lot of people were probably bailing at that point. Supposedly, people getting margin calls, they could always sell their gold, and they sold it to cover the margin calls, and that's why gold went down at that point.
Yeah. There could be a wild card out there. Like, who knows with currency issues and overseas issues going on in digital currencies, there could be some Hail Mary event that makes precious metals skyrocket, and the gold stocks, precious metal stocks could rocket as well and defy the bear market gravity. But I mean, it's pretty slim. We haven't really seen it happen before. So there'd have to be some major shift in the financial markets that gold and precious metals become front and center again. But I'm not really sure that'll happen. And, gold, I think, is setting up to something similar to what we've seen in crude oil. If you were looking at the monthly chart of crude oil, 2015, 2016, 17, more or less, it put in a major bottom. And then it broke to a rally last year into a bull market, and then it rolled over and it died. And that's where we are now. And gold could be doing the same thing. It's been forming a base just like that. We could get this end of a bull market rally in the safe havens. We see gold, silver miners rally up. Feels like we're in a new bull market, but then we enter a bear market and we see it crash and break down. And maybe crude oil is kind of, foreshadowing what could happen with the gold commodity. So that's kind of what I feel like is going to happen. I hope we see it break to new highs and see a nice run, but there will be a time when you need to get out of it, probably this year again.
Yeah, just from a trading standpoint, you want to
be from a trading standpoint. Yeah.
If you're a longer term investor, that might be the time you're buying more, right?
Yeah.
So interesting. So then we look at oil, which has been just stuck. It's gotten hit big time last year. It was down like 30 some odd %. And in that low 50s US dollars we're talking, is that where it's going to stay put for a while, or is there going to be a rally further on?
I think it's gonna find a bottom here and have a rally and push up with. I think resources in general are going to move higher. So I do feel as though crude is going to find a bottom here. It's going to rally up. I think we're going to see precious metals probably rally with it. I think it's based on my cycles, I think it's only got at max, I think about 6 months of potential rally to the upside. We could see it get into the $60, $62 per barrel mark, which is a significant rally from where we are right now. And I think that'll kind of be a rollover phase that'll be a time, I think, when resources in general are going to be a time to move out.
Interesting. So resources, they could be taking the hit. And so your take on the currency markets? We heading for a potential disaster here? What's going on there?
I don't follow the currencies and overseas markets too closely, so I don't really have a whole lot of insight. Looking at the dollar index, I do feel as though it's got room to continue to run. It's making a series of higher lows and higher highs still. I think it's gunning for that 100 mark, very significant pivot highs back in 2015 and 16. It was also a significant level that it broke above in late 2016, found support, and then broke below it. So it's a very strong pivot point. It's either stuck under it or it's stuck above it. So we are under it right now. I feel like the market could run into that level. And that's, I think, is what's going to put some pressure on. I do feel as though gold's going to be out of favor here for 45, 60 days or so. And that gives the time for the dollar to move up to that 100 mark. And then I think the dollar is going to reverse and we're going to see the commodities have that run that we're looking for, this breakout and run for 2019.
Yeah. Any other markets you see particularly poised to go one way or the other?
Well, I like natural gas. I like natural gas a lot. If you ever look at the weekly chart going back to mid 2016, there's a line on the sand about 255 or so, where we've seen natural gas come down to 255. Every time it's hit that level, we've seen a multi-month rally out of there, and some of them are explosive, huge moves. And we had this recent run up in October, news and weather-based spike. Usually, a weather or news-based spike is usually given back within the same amount of time, almost, that it goes up. We've seen that fizzle out. Natural gas has been in free fall mode. It hit 255. It's bouncing this week, and I think it's got potential to bounce just from a technical short-term trader standpoint up to the $3 mark, potentially up to around the 340 again. So I like it a lot. It's fallen into a significant support level very quickly, and usually you get a reaction, a bounce off that level.
Interesting. What they call natural gas in the trading pits, right?
The Widowmaker.
For good reason. For good reason. But one thing I do notice about natural gas is it seems to know what the weather is going to be before, at least in the Northeast, before any other indicator out there knows. That I've always found amazing, because you'll see it heading up a week or two before a cold spell, and then boom, it hits. And then it goes up higher, and then invariably it crashes from that point. So maybe we're going to be getting a cold spell in the Northeast here in the States, right?
Yeah. You never know. And it's always amazing how the markets move and why they move. Sometimes we never know. And, there's planetary cycles at play that whether you believe it or not, there's magnetic fields at play. There's all kinds of things that pull on people's emotions. And there's days when people want to buy. There's days when people want to sell. It's herd mentality. Yeah. Whatever the reasons are, there's many of them. We move as a school of fish in general.
So how do you take advantage of the herd?
Well, I use cycle analysis. I've created cycles that more or less analyze on different time frames the waves and of emotions of the market that's moved. The stock market is more or less the mentality, the emotions, whether it's buying or selling in the stock market of investors. And so I use a lot of cycle analysis paired with other technical analysis like key support levels and things like that. So I like to look for cycles on the upswing. You want to be buying. When things are on the downswing, you don't really want to be buying. And that's what I do. I focus on a lot is on cycle analysis and simple trend analysis, because a trend is more likely to continue than it is to reverse. So if you're in an uptrend, you should be looking at buying pauses or dips and try and time it with a cycle low. When after there's been a little bout of selling and cycles are pointing to the masses should be starting to buy again. That's what I try to do. So I just follow that mentality and that strategy, and it works really well.
Yeah. So it's always that saying when you're at the poker table, if you can't figure out who the sucker is, you're the sucker. Yeah. You ever found yourself being the sucker when you thought you were the player?
Yeah, actually last week I was at a poker game and I thought I had it. I was all in and I got totally played.
Yeah, you got toasted.
But it happens in the stock market all the time. The markets, no one can predict them with 100% certainty. And sometimes your strongest intuition is dead wrong. It's just the way the markets are.
Mm-hmm. So you could be wrong here, but you feel like the signs are lining up, and you're not just basing it on gut feel. There's a lot of technical indicators. The fact we had that golden cross where the 200-day, the 50-day moving average crossed the 200-day moving average, not dispositive, but an indicator. And then you've got the trading patterns taking place and such. So you think there'll be like this capitulation where people say, it's just not going to go any higher. They bail on it. It goes lower because maybe the dollar is going higher as well. And then all of a sudden it just reverses and we see it really start going into what can't be denied as a bull market.
Yeah. There's a lot at play. I don't just, trade by the seat of my pants. I usually have a lot of different things line up, and obviously there's a fine line. I learned this a long time ago. If everything is lining up as a buy signal, everything's oversold and been dropping, fear is really high. There's panic selling on the New York Stock Exchange, like record levels of more shares being sold to being bought on that day. If everything is lining up and screaming it's a bottom, it's not a bottom. There's so much momentum behind it. It's the start of a bigger drop. So there is a fine line between having a bunch of your favorite indicators lining up and having all of them line up, because if they're all lining up, there's just too much power or momentum in the market. And it's actually a signal just to trade against it and to catch some type of huge blow off top or capitulation sell off. It's half art, half science. You just have to know when too many things are making it look too good.
Mm-hmm. Yeah. So you can get fooled. I mean, we can all be fooled, right? I mean, we've all been fooled so many times. It looked like 16 was the beginning of a massive bull move in precious metals, and shame on us, right?
Yep, it's just the way it goes. But I mean, you can call the market and be wrong and still make money. It happens all the time. Just because gold doesn't pull back, say it takes off from here and starts to break that 1360, sure, I thought it was going to go down, but if it starts breaking out, I'm jumping on board. So I don't care if it matches my forecast or not. If it meets my technical trading triggers, I'm just getting on board. Whether I said I think it's going down and 3 days later it has some massive rally and takes off and I get long, that's just the way the market moves. You don't stick to what you talk about, and you're because the market changes every day. I reanalyze, recalibrate every day, and I just roll with the market. If it doesn't do what I thought it does, well, I adjust any positions or get into new positions. So it's just the way it is.
So I guess what you're saying is you don't get emotionally involved in any trade, and therefore you're free to switch course at any moment, right? Yeah.
You trade with a broker. It's $1 in, $1 out. Who cares if you spend, you can trade all day. It's just a trade commission. If you're wrong, you get out. It is nothing worse than holding on to a wrong position because it bleed your account dry.
Yeah. So where do you find that? How do you get the emotional clearance there, the emotional separation from your trades?
Yeah, well, I've done it for 18 years, and I started when I was 16. So, I've kind of gotten numb to price swings, but the key is to not overtrade position wise. If you're trading something that moves extremely fast, you trade a small position size. So you don't have these. I'm not a huge fan of massive price swings of my account. I've blown up 2 accounts completely trying to learn to trade. And I'm at the point now where I just chip my way. Every time I have a little winner, I'm happy. And I don't care if I make $100 or I make $1,000. It's all the same. I just follow my strategy. If I think I'm wrong and it feels like it's wrong, I just get out, regroup. The problem is everyone puts too much money into a position. And if it moves 1%, it could be enough to freak them out. Or it could be 3 times ETF that moves 18% in one day, and they panic out. And that's just the problem is people overtrade their account. They want to make ridiculous gains, which I get, and we all do.
Yeah,
but
greedy.
You can't be swinging for half your account or all your account in one stock trade that could move based on news or earnings like 20%.
Greed is going to do you in every single time. That's been my experience, and better to be happy with singles and doubles than looking for a grand slam on every trade, because it just isn't going to work that way. And so you think the action's going to be the metals markets, maybe a slight trading opportunity in NatGas, which I don't know. We've had a freezing winter in the Midwest, but that's not a big gas market, I guess. They're more into oil heat, and the price of NatGas is, kind of crashing. So you think that's coming, though, probably sometime in March? You think it's going to do a turnaround?
Well, I think it's turning around right now. It came down and tagged our 255 level a couple days ago. We got long a leveraged natural gas trade. We're looking for a knee-jerk reaction here. So I think over the next few weeks going into March, yes, I do feel it's going higher. I think it's had the bounce. It may come back down and test that level, but I think it's going higher to that three plus mark within weeks here.
That would be pretty amazing. It's so complicated, the nat gas market, because you've got all these shut-in wells all over the U.S. that can't produce gas profitably at 255. They just cannot do it. Unless it's wet gas, they can't do it. So the dry gas wells are shut down most of the time, but then they come rapidly online when the price jumps over $3. And, so it's a complicated market. So my hat's off to you that you have the emotional stamina to really play that market. Not many people can do it and turn a profit on it, especially.
Yeah, it's a fast mover. It's I don't care what the wells do. This is a pure technical momentum trade. It's it's like a ball getting whipped to the ground. It's going to bounce when it finds a major support level. So that's all we're doing here. It's quick play, in, out, move on.
Yeah, hey, totally understand. So hey, tell us how we subscribe. What offers available on your site and your site?
Yeah, Yeah, so my website, you can go to the goldandoilguy.com or thetechnicaltraders.com. And every morning I do a pre-market video that I cover all these markets in detail with an intraday and a daily chart, give you a feel for what happened yesterday and why, what's happening today, how it should move looking forward for the rest of the week. If we have any positions on, I cover those. And so I just pretty much walk you through visually my charts every morning before the market opens and issue any trades that I take. So it's pretty simple, straightforward, but very educational. And it gives you a steady stream of trades. So
all right. And we'll have a link in the show notes. As always, happy trading, Chris. It's always great to get your perspective on things. Really does help clarify things. Even if, doesn't tell you what to do, it really clarifies your thoughts, which from there you can make your own decisions and figure out your own moves. But it's important to hear from people who are successful at trading these markets and have been doing so for quite a while. Hey, as always, join the show and email us, kl@kerrylutz.com. The Twitter feed is @KerryLutz. Facebook page, Financial Survival Network. On YouTube, please subscribe, like, and share, as well as the regular podcast channels. Really helps me and the show a lot when you do that. Helps get the message out. Chris, we will talk to you again real soon. Thanks for coming on.
Thanks for having me, Kerry. Always a pleasure.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.